Shares of Vedanta have rallied about 1.5% as it's resolved a long-standing dispute with SEPCO, clearing a key bottleneck for their demerger plan.
Tata Tech acquires German automotive engineering service provider Estec for 75 million euros. The stock is higher by nearly 2%.
KRBL slumps in high single digits as independent director Anil Kumar Chaudhary resigns and writes that the dynamics of the board were inconsistent with the principles of effective governance.
Spirit makers Radico Khaitan and Allied Blenders surge as Jefferies initiates coverage with a buy rating. The brokerage sees strong growth potential led by premiumization and expects double-digit growth going ahead.
Railway stocks rally. Railtel, Jupiter Wagons and RVNL, all of them higher as orders pick up in September. Projects worth nearly 77,000 crore rupees also being implemented in the northeast. Morning, you're watching us here on Chartbusters on CNBC-TV18. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu, with me Vinny Motiwala. Not particularly bad for the market, given the fact that we've rallied for 8 straight days. Some consolidation is something that the bulls would have liked, and that exactly is what is taking place right now, with two things doing better for the bulls. One is the mid-cap index, which is higher by 1/3%. So your portfolios are feeling a lot better. More stocks advancing versus the number of stocks which are declining. And secondly, the Nifty Bank. For the last 2 trading sessions, the Nifty Bank has been doing well. So now, from a technical standpoint, there's a clear 700-800 point runway for the Nifty Bank before the 50 and the 100-day moving average kick in. Just look at HDFC Bank, the highest weight on both the Nifty Bank as well as the Nifty, currently at the high point of trade. So if that continues, then we may see a further up move on the frontline indices, and as a result of which, maybe some further short covering as well. Hi, Vinny.
Hi, Mangalam. Good morning. You've covered up most of the market. Just a couple of sectors I would like to highlight today. Nifty Realty, that's the one that's buzzing in trade. Keep an eye out on that, 0.8% of gain. On the flip side, we have Nifty IT. Obviously, last week we had seen a bit of a run-up coming in for the Nifty IT. Today, it's a bit of an underperformance, down almost 1%. And other than that, in terms of trends, we're seeing the railway stocks, they have picked up pace. Last week, we had seen a lot of order wins. Now, seems like, that's still something on the back of which we're seeing a run-up coming in for these railway stocks. So that's something we'll be keeping an eye out on. But let's also welcome Shivangi Sarda of Motilal Oswal for a check on the market on the technical front. Shivangi, good morning. Thank you so much for joining us on the show. Quick check in terms of the levels now that one should be keeping an eye out on for the Nifty as well as the Bank Nifty.
Good morning. Thank you, Mangalam and Vinny, for having me. So we've seen that, the indices have shown quite a lot of strength in the last 2 weeks. And the put-call ratio now stands above 1.2 levels, which is clear indication that put writers have made a strong base. Now, call writers have shifted from 25,000 to 25,200 sold. So we can clearly see that the shift has, been seen across the board. Now, of course, there has been some sort of consolidation post-opening in today's session, but overall the markets look quite positive, and we are going for buy and decline strategy going forward. Now, we're looking at 25,000 as an important support here, which was earlier a psychological barrier. Clearly, role reversal has happened. So now, taking this as support, we're looking at the upside levels of 25,200 immediately and then 25,350 levels. Talking about Bank Nifty, of course, this index had outperformed in the last 2 trading sessions. After a series of underperformance in the last 2 weeks, we've seen that smaller banking names have contributed to this index, and we're comfortably holding, near about 55,000. So once it, manages to cross and hold above 55,000, we could see strength towards 55,500 levels on an immediate basis, with a support of 54,800 marks. So this would be the take on Bank Nifty.
All right, that's the take on Nifty Bank. Lately we've been seeing some traction on the Nifty IT index as well. It's been outperforming for a while after underperforming. Shivangi, do you have a view on the Nifty IT? In fact, it crossed past the 50-day moving average on Friday, and now we're looking at the next important level, which is about 600-700 points away for the Nifty IT. You're looking at that index, and what are the individual stocks that you have on your radar?
So Mangalam, IT index had gained attraction in the previous week, but we've seen that some of the major mid-cap names giving up strength today. In fact, the heavyweights like Infosys have also given up strength. So IT index would be a wait and watch at these levels. But apart from this, some of the defense name stocks are looking quite positive, and they have gained quite a lot of attention in the last couple of sessions. We've seen, on my radar is HAL, which has seen a good amount of short covering move and then followed by long build up in the last 4 trading sessions. Excellent volumes have also surged along with the price, and it is now, comfortably trading above its crucial levels. Now, it has recouped most of its losses of the last 2 months, and we're looking at a more potential upside here. So, recommending a buy here with a further target of around about 5,100 levels for HAL with a support of 4,700 levels. And the second pick on my radar would be Bajaj Finserv. We've seen this stock has rallied from the last 2 weeks, and we've seen consistently holding above key levels. There has been a pole and flag pattern formation breakout on the daily frame as well. And excellent follow-up can also be seen. It is now comfortably holding above its previous hurdle levels as well. Now, there has been an OI spurt in the last 2 trading session, which is quite positive. So recommending a buy here with a target of 2150 and a support of 2050 levels.
Okay, Shivangi, thank you so much for joining us as well as giving us your thoughts in terms of markets, what we should watch out for, as well as your individual picks. But on that note, let's shift focus now to a special segment where we will get you a few ideas for profit from Money Control Pro. We have Lekha Badlani, who's joining us from moneycontrol.com to talk to us about the stock that she's been tracking closely. Lekha?
Yes, thanks. So we think Krishna Diagnostics presents a compelling investment opportunity backed by strong financial performance and a robust growth pipeline. In Q1 FY26, the company delivered 13% YOY revenue growth and a 19% increase in EBITDA, with margins expanding to 27%, reflecting improved pricing and operational efficiency. The execution of the long-awaited Rajasthan contract marks a significant milestone, which is expected to generate a 300 to 350 crore in annualized revenue. Now, this rollout, along with upcoming pathology and radiology centers in Jharkhand and Maharashtra, provides clear visibility on near-term growth. Now, Krishna's strategic investment in Apulki Healthcare, a PPP hospital operator, further strengthens its long-term prospects. As the exclusive diagnostic partner for Apulki's hospital for over 30-plus year tenure, Krishna secures a captive customer base and premium pricing potential. Moreover, Krishna, which was once a PPP, that is public-private partnership only diagnostic chain, is now finding its footing in the B2C segment. Its retail arm now contributes 6% to the group revenues, up from 1% last year. Now, while the segment is currently EBITDA negative due to upfront investments, management expects break-even by the end of FY26, leveraging shared infrastructure to drive cost efficiencies. Now, despite offering diagnostic services at over 70% below market rates, Krishna maintains industry-level margins, underscoring its cost leadership through scale and operational excellence. For FY26, the management is guiding for over 15% revenue growth and 25 to 27% EBITDA margins. Now, currently trading at around 9 times FY27 estimated EV/EBITDA, the risk-reward remains attractive for long-term investors.
All right, take that point. Thank you, Lekha, for that. Take a short break, come back, focus on the lot of stocks that are buzzing around, focus on the markets as well, which are consolidating right now. Mid-cap index up nearly 180 points. Stay with us.
Welcome back to Chartbusters on CNBC-TV18. Nifty is managing to hold on to 25,000 levels even as of now, so no complaining on that front. Very muted day, not much of a downtick. We've recovered from the day's lowest point as of now, so keep an eye out on that. Godavari Power, that's the stock that I want to keep an eye out on because that's also seen a bit of a spike up in today's trading session. It's trading with gains of almost 8%, and just look at it in the last half an hour. Seen it further go up, right, and pick up that momentum. So that's the one we should keep an eye out on as well. But let's move on and talk about a stock that's falling in trade today. That is KRBL. Why are the cuts coming in? There are some concerns over governance practice that has come in. Vamakshi is joining in with us now to give us details on this one. Vamakshi, what are the details in terms of these concerns that are coming in? What are you picking up here?
Well, absolutely. I mean, independent director Anil Kumar Chaudhary has tendered his resignation. Now, in his resignation, he's written that the present dynamics of the board are inconsistent with the principles of effective governance. Now, some of the key issues that have been highlighted in his letter include, number one, inconsistencies in recording of minutes of the board and committee meetings. He's also alleged that there were instances of information being withheld, impacting informed decision making. He also alleges that there were unjust write-off of certain export receivables without adequate deliberation. There were concerns regarding the use of CSR funds. Other than that, he's also highlighted arbitrary distribution of variable pay and annual increments to persons holding office or place of profit. Now, significant changes to the object clause undertaken without comprehensive discussion, as well as undue interference by invitees in the proceedings of the board and committee meetings. These are some of the key concerns that have been alleged by him. In fact, he also said that and I quote, in such an operating environment where dissent is suppressed or sidelined, remaining on the board would compromise both my professional ethics as well as obligations. So, that is something, to take a note of. Apart from that, it is important to know that KRBL informed that he had resigned on September 9th, but the details of the letter that were written by him were only, disclosed to the exchanges on Sunday. So, given this sort of development, citing concerns on the governance of the company, the stock is down in trade today.
Take that point entirely. Thanks a lot for that, Vamakshi. Just watch out for KRBL. Those allegations definitely look, more serious in nature when it comes to corporate governance, questioning the corporate governance of the company. Not the first time this has happened, but usually the company has a response to that. We'll obviously assure our viewers that our teams are constantly in touch with the management of KRBL to try and join us to answer some of the questions. So we'll watch out for that. Meanwhile, GMR Power is the other one we should look at, because nearly 50 lakh shares, 60 lakh shares have been traded on that counter. So perking up on big volume. So that's GMR Airports. I'm talking about GMR Power. If that one comes up for you on the screen right now, you'd see that it's one of those big volume buzzers in today's trading session, up around 7% with a fair amount of shares which have been traded. On an average basis, we have about 21 lakh shares which trade on that counter. But today, in the first hour of trade itself so far, we've seen that number cross 50 lakh. But railway stocks, Vinny, they've been on track for a lot of gains.
On track, and hope this continues, right? Because those execution in the terms of their orders was a concern that came in even in Q1 and the full of last year. But let's talk about what's the good, right? From last, when you look at it in terms of last week, we've seen a lot of order wins that came in from these railway companies, right? So first, let's talk about RailTel. Just over the weekend, they had a order win that came in as well. So that's an important one. That was also from State Project Director of Bihar Education Project Council of around 200 crores, about that. September 9th and September 8th also they had order wins that came in. One was again a 700 crore order from Bihar Education Project Council, and the other one was an order of around 18-19 crores from IRCTC. RVNL too had an order win last week. Their order win was of around 169 crores from the West and Central Railway. So that also was a positive for RVNL. Jupiter Wagons also an order win that came in over there of around 100 crores last week. And key triggers now what we're watching out for in terms of a lot of commentary that has come in, what we're seeing from Ashwini Vaishnav. He said that railway projects worth 77,000 crores are being implemented in the northeast. So the northeast side of railways and more development in terms of railways, that is something that is a big trigger. We have also PM Modi, who had recently inaugurated one of these railway lines in Mizoram, and there are projects of worth around 9,000 crores that will be coming in there. So the northeast region, where we'll see a lot more development. Do not forget, managements have also highlighted in terms of commentary, whether they've spoken to us or in the Q1 con call, that now that wheel set availability issue which was there, that started easing, that started improving. That means that we could start seeing an improvement coming in terms of the execution for the order, and likely there could be an execution improvement going forward. So that is a positive that comes in for these companies.
All right, so basically order win is the engine and execution are the wagons. If the order win comes by and execution follows, that happens, then the gains are on track.
Then we're going in a super fast train then, Mangalam, if that works out well for them.
All right, if they're going in a super fast train, let's keep the spirits high as well. That's what we were talking about right now. The spirits, all those stocks are up and about in today's trading session. Jefferies actually initiated coverage, or how do you say that, opened the bottle on India's Alcobev space. They have a target of 1570 on United Spirits. Radico Khaitan is about 3500 and Allied Blenders is about 620 rupees as well. The basic thesis for this. India's demographics are favorable for the alcobev industry. Well, globally, we are seeing a bit of a slowdown. India's low per capita consumption and premiumization are things that would, favor more than double-digit sort of value growth come by, at least in the P&A segments of all these companies. They believe that United Spirits, which has been the market leader, has obviously become a lot more attractive after a 20-25% downtick from the peak, and they see double-digit top-line CAGR and a meaningful room to expand margins for the likes of Radico Khaitan as well as Allied Blenders. So for Radico Khaitan, they expect the EPS CAGR to be over 35%, so that's a positive. Allied Blenders, they believe, with regards to their margin expansion and some of their portfolio products that they are launching right now and gaining market share in there, could be a bit of a dark horse and provide a fair amount of up move as well. So United Spirits on price correction, the industry on favorable demographics, 35% EPS CAGR for Radico Khaitan, and Allied Blenders on margin expansion as well. So those are a bunch of alcobev stocks which are buzzing around today. Let's go across to Sudarshan. Northern Arc is the one which is surging. DAM Capital has initiated coverage on this stock. Sudarshan, for Radico Khaitan, it's expected to be a 35% EPS CAGR. But for Northern Arc, it's 39%.
That's correct. And as far as the stock price is concerned, DAM Capital is saying that from this level also, it's expecting a return of almost 40%. So it has initiated coverage with a buy call, and target has given is of rupees 335. It's saying the stock is currently trading at an attractive valuation, and mentioned few of the catalysts. First one is increasing share of direct-to-customer lending. Second one is easing interest rate environment, and believes that it will help company to expand its margin, and fund management and placement business will enhance company's fee income, and it expects asset quality headwinds to abate by H2 of FY26 and normalize by the next year, that is FY27. And considering all these factors, it expects EPS CAGR of more than 39% over FY26-27.
Okay, Sudarshan, thank you so much for that. Northern Arc, as of now, managing to hold on to gains of almost 6.89%, that we're keeping an eye out on. But on that note, let's just slip into a very short break. And after the break, we'll get you more on the markets and stock-specific action. Stay tuned in.
Welcome back. Hindalco is one of the stocks which has now moved higher. Alongside that, in the broader markets, Angel One is seeing some bit of traction as well. Remember, these capital market stocks are something that we'll watch out for going forward. There was no conclusive, decision on whether daily expiries or weekly expiries would be stopped by the SEBI. They will issue a consultation paper on the possibility of that happening. These stocks had seen a big downtick. BSE is the one that should come up for you as well. So let's see whether that, sees some build-up now or a bit of a relief rally on account of the immediate fear of that being dispelled. In fact, we're speaking about the SEBI board meet outcome itself. Sudarshan joins in with some of the key takeaways out there. Sudarshan.
So on Friday, that is September 12th, SEBI held its board meeting and announced some major changes as part of ease of doing business. So I have taken major three issues. First one is minimum public shareholding and MPO rules. Second one is IPO and anchor investor participation. And third is mutual fund exit load. So first talk about MPS and IPO rules. So now even large issuers can now list with lower initial public float. So they have revised the MPO, that is minimum public offer rules, and also extended timeline to meet MPS. And now that is MPS meeting norm is 25%. So first talk about for mega capital companies, that is mega companies with a market capitalization in the range of 1 lakh to 5 lakh crore. For this MPO, they have revised it to rupees 6,250 crore, and for post-listing, post-capital market issue, it should be of 2.75%. And for super mega capitalization companies, and for that range is more than rupees 5 lakh crore. For that, MPO is rupees 15,000 crore. And it has to be at least 1% of post-issue market capitalization or 2.5% dilution. Or it has extended compliance timelines, that is up to 10 years for achieving 25% minimum public shareholding norm. So they have given the range, that is 5 years to 10 years. Now, second issue was IPO and anchor investor. So the important part is they have increased, basically expand the anchor allocation. Now they have included life insurance companies and pension funds. So they are saying that out of 100%, 40% will be reserved, and of that, 1/3 of 40% will be reserved for domestic mutual funds, and remainder of that will be reserved for life insurance companies and pension funds. So what if some of the issues remain like unsubscribed? So in that case, it would go to domestic mutual funds. One issue was mutual fund. For that, exit load capital has been reduced to 3% from 5%. Basically, exit load is the fee basically mutual fund charge you. And apart from this, one issue that SEBI chairman has talked about is the long-term derivative contract. For that, he has said that consultation paper will come because it's a complex issue, and now the paper will come after the feedback he receives.
Okay, Sudarshan, thank you so much for that. And addressing the media, the SEBI chairman, Tuhin Kanta Pandey, confirmed that the CNBC-TV18 news break, when asked about futures and options, SEBI chief promised to circulate a consultation paper on longer tenure derivatives for public comments. Listen in.
कि हम अपना काम करें कि हम रोज़ यही बताते रहें कि आज हम नहीं बता रहे हैं, कल आएगा। आपको हम बताएंगे। हम जितना सेबी ट्रांसपेरेंटली मीडिया से बात करता है या भारत की जनता से बात करता है, उससे अधिक हम क्या करेंगे? हम हर चीज़ डिसीजन लाने से पहले हम कंसल्टेशन पेपर लाते हैं। उसमें भी हर प्रपोजल पे हम कमेंट लेते हैं, प्रपोजल वाइज लेते हैं। उसके बाद हम उसका अध्ययन करते हैं और फिर हम अपने रेगुलेशंस लाते हैं। तो हम सब तरह के फीडबैक लेते हुए काम करते हैं।
All right, so important comments coming in from Tuhin Kanta Pandey. Just keep an eye out on delivery. That stock opened in the red, now has moved higher. All these express parcel delivery companies doing better ahead of the festive season. So maybe we'll watch out for how this one pans out too. But speaking about the markets, by and large, we have a conversation that we had with Manish Chokhani of Inam Holdings. He expects the final US tariff on India to be around 20%, but a little cautious on the Indian market right now. Why is that? Listen in.
What's happened with US and India was a surprise to everyone, I think, including to the protagonists over here.
Yeah.
Something changed during Sindoor.
Yeah.
And then I'm guessing something's changed over the last 1 week again to bring things back to what looks like even keel. But yeah, I mean, if you zoom back in a larger context, India and US have been the two best performing markets in the world, the best democracies and the best sort of places for capitalism to thrive. Even if you get to the 15 which the allies have, which is Japan, Korea, UK, I don't think we get to 15. But if you're at 25 and you have some way around that, let's see, maybe we end up at 20.
All right, with that, we'll wrap up on this edition of Chartbusters. Thank you so much for watching. Stay tuned to CNBC TV18 as Trading Hour comes up next.